Good evening, everyone, and welcome to Juwai IQI Canada Evening Talks. My name is Yousaf Iqbal. I'm the country head of Juwai IQI Canada. First of all, I'd like to thank all our viewers who have been, constantly watching the July IQI Canada evening talks. We are doing language programs as well. We have Mandarin on Friday. Saturdays, we try to bring in the Hindi Urdu version of it. On Sundays, we have the Cantonese speaking, agents from our side, and also we had a very amazing session in Farsi as well. So thank you very much for watching that. And today we are back on our monthly economic outlook. And who would be a better person to tell us that what's going on in the world, other than Shan Saeed, our chief economist for Juwai IQI Malaysia. Shan, welcome to Juwai IQI Canada Evening Talks. How are you doing?
Thank you, Yusuf. I am fantastic. How about you?
I'm doing very well. So I heard that, yesterday we were having a very late night meeting on our weekly meetings. And it was late night for me. It was early morning for Malaysia. That you guys have gone into a lockdown for 14 days. Is that what it is? Is it a complete lockdown?
Yes, Yusuf, it's a complete lockdown for 14 days, and the government has just allowed certain sectors, mostly manufacturing, to operate. So the basically the purpose is to bring down the cases. It touched 9,000, but yesterday they went down to almost 7,000. So it was a uh, good omen for the country. But overall, the government looks totally committed to bring down the cases, and the only way forward is to get vaccinated. That's the most important thing. So I think the government will be speeding up its operation in the next 2 to 3 months. Hopefully things will get better.
I hope so because I mean 8,000 or 9,000. You said almost cases that was quite high on that. I mean, and the vaccine is already on the rollout, right? I guess everybody is getting vaccinated there, right?
Absolutely. I've also registered. So everybody's waiting for now for their turn. So let's see when my turn will come in.
And I can tell you, Sean, it will make a big difference because in here in Ontario by itself, we were looking at the cases were going to about 4,000, 5,000 a day before the vaccination. But now, since the vaccination started getting rolled out for last 1.5 months, especially, now the cases have gone to almost like 1,000, 1,100 a day, and they're actually looking at getting the second dose of vaccination even earlier. Previously, they were giving us like 3 months of time for each of the vaccination, but now they're actually looking at actually reducing that. And as soon as the vaccination goes available, we'll get on there. So I hope these things get better there, and just stay safe for yourself as well and for all of Malaysia.
Thank you.
So, Sean, coming back to our questions, one thing is for sure, Sean, I can't keep up with you, man. I mean, it's amazing the way I try to keep up with you is that because every second day, third day, I see from the desk of Shan Saeed, either it's going to be an interview or there is a talk on LinkedIn, and your insights on that. So that is really amazing to see that on that. And of course, when we're talking about that, I know, when we talk about yuan, I know that you're such a big fan of yuan and your insights are much ahead of the market. Tell me why yuan is getting so much strength against USD.
Thank you, Yusuf. I think if you look at yuan in the last 12 months, it has appreciated from 6.55 to 6.37 right now. And it really reflects the strength of Chinese economy. By May last year, China was already reporting a trade surplus when everybody was locked down. So I think go moving forward for this year, July IQI, we have already shared the GDP of China will be trading between 6 and 8%. And for yuan, we are witnessing great strength, and it will be appreciating 4 to 5% from here. So I at the year end, I expect yuan will be trading between 6 and 6.10, and the strength of yuan comes from the productivity, the growth it has witnessed in the last 12 months, despite the pandemic and COVID situation. The government has focused on dual circulation strategy. What is dual circulation strategy? When you focus on domestic demand and domestic investment. That has been the key for China in the last 12 to 15 months. So moving forward, I expect yuan to be gaining further strength against USD, and USD will get a lot of beating. And I still remember almost 11 years back, when I was talking about Chinese yuan, people were laughing at me. 7th January 2011, the topic of my presentation was yuan, currency for the emerging markets. And I was in New York. And the only person who believed in my insight was my Nobel laureate professor, who was sitting right at the back. And one of the feedback that the audience gave me, I still remember that Shan is mentally retarded. And it is still the best feedback I have ever received in my life, that Shan is mentally retarded. So after 11 years, where is Yuan and where is Shan, who was supposed to be mentally retarded in 2011? I think God has been too kind, that I'm still mentally stable and Yuan is gaining strength. So I think Chinese yuan will continue to gain strength against USD.
Amazing. As you always, you should always stay ahead and stay ahead with Shan Saeed and, stay ahead in insights of the market as well. Moreover to that, there was also a latest report by HSBC, which was shared by Ashley on LinkedIn. And I want to, share that report with our viewers. It says that China will double its millionaire by 2025. HSBC said that China will also boost the size of the middle class by almost, half in next 5 years, spurring even more consumption. Just to give an insight on that, like HSBC also estimates that the number of high net worth individuals, with at least 10 million of RMB yuan investable assets will likely to increase to 5 million by 2025 from just about, which is 2 million today. The middle class, which numbers about 340 million now based on the narrow definition, will grow by more than 45% to over 500 million in the same period. The household wealth will rise about 8.5% every year over the next 5 years, with investable assets reaching to about 300 trillion yuan RMB in 2025, or about 300% of China. I mean, that's going to be really amazing. So I can see where your insights are coming for the yuan against the USD.
Yusuf, this is massive. When you say household wealth increasing by 8.5%, and this is absolutely, the report is very relevant. Thank you for sharing this. And the way China is moving, it is all about middle class. How strong is your middle class? Countries grow economically when your middle class is rising. So is the rising middle class is the rise of red currency, as they call it, to Chinese yuan. So I think this report is quite relevant, and you should share it with your valued investors who are following you religiously.
Perfect. We got a few people who have joined us as well, so we're going to say hi quickly. Hi to them. So, hey, Emerson, thank you for joining. All the way from Malaysia. Emerson is always there. On our live shows on that. And hi from Bob Zhu, who is our VP operations, and also he's our branch manager for our Richmond Hill office on that. So also about the convertible bonds, I was reading a Wall Street Journal that you posted on LinkedIn, that publicly traded companies, are selling bonds that convert into stock at a record pace this year, with nearly a third of those issuers paying nothing in interest as they seek to take advantage of low rates and investors' revenues for the fast-growing firms. So this year, like 97 US listed companies have issued 54.3 billion worth of convertible bonds, according to Dealogic, a data provider. That is the highest year-to-date volume ever, 11% more than amount raised at this point in 2020, which was a record-setting year for convertible debt issuance. What is the main premise for behind this, Sean?
Basically, Yusuf, there are two premises to this. One is the investors are worried about inflation, and secondly, about interest rate hike. So this is the major concern. But if you see the report that you shared from Wall Street Journal, it's quite relevant in the sense that companies are playing clever. They are moving away from debt and they are going into equities where the cost of raising equity raising fund is zero. So I think they foresee that there will be some cash flows issues moving forward. And with rising inflation, the central bank would raise interest rate. So once the interest rate will go up, obviously the cost will go up for many corporates who are still relying on bonds. So I think it's a clever move. And when I see this file of convertibles, it recalls me one of the books that I read long time back from Lawrence McDonald's. The title of that book is A Colossal Failure of Common Sense, in which he talks about his early days in business and his entry in business and his work at Lehman, and how Lehman actually collapsed before he departed. And I still remember when people talk about US, I have seen financial history very closely with my sinful eyes, because I was in US when base terms went down. It was 18th March, 18 March 2008, Tuesday. I was there. Base terms went down. 15th September 2008, Monday, first day of my elective at University of Chicago, Lehman Brothers went down. So I have seen history very, very closely. And I consider myself very fortunate that I have seen what happened from 2007 till 2009 to the US market. So I think if anybody wants to know what actually happened to Lehman Brothers, I think they should read this book. I read this book 2 times and I got a lot of information. So I think moving forward, more and more corporates will be moving away from bonds, and they will be raising their funds through equities, because right now the cost of equity is absolutely zero. So it's a clever move, I would say.
What about Shan? One of my favorite thing every time we ask about is the crypto. And I know that that you're not a very big fan of Bitcoin. I remember, I think it was about like 3 years ago, 2 years ago, we were doing. I think it was 2000. Correct me if I'm wrong. It was 2018 or 17 when you were talking at Pakistan Business Council when we were there for the Cityscape restore, and there was a question asked to you about Bitcoin, and you said that, well, you know what, you had a different take on Bitcoin always. So where is the market heading with the crypto right now?
Thank you for asking me this favorite question of yours and mine. Yusuf, I am 47. I only work hard on three variables: morality, integrity, and my credibility. And I've always maintained one statement: whether I am right or wrong, I will go and speak in public and I say, I made a wrong statement or I made the right call. So, what I shared in 2016, 2017, I still maintain the same statement that Bitcoin is a bubble, it's a Ponzi scheme, it's a scam. Look at on 14th April this year,
Yeah.
Bitcoin was trading at 64,000.
Yeah.
And after 1 month, it was trading at 30,000. Now, almost down by 50%. Now it is trading at 36, 37,000 as of last night. So it is almost down by 40%. So when a variable, or some people call it an asset class, I don't know what is the asset class. It doesn't have any fundamentals. It swings 30% up and down like a pendulum. How can you call it as an asset? I've never seen real estate or gold or silver or arts or yachts or oil and gas moving 30% in a year or in a month's time.
Yeah.
So I think I'm not a big fan. Murtaza in Canada is a big fan, and he's always, talking about Bitcoin. One of the banks, I will not mention them, they're saying now that Bitcoin will be trading $150,000. So I
Yep.
don't know how it will trade from here. Anything can happen. Why Tesla's Elon Musk, he offloaded his position? Because Bitcoin uses a lot of fossil fuel, and in fossil fuel they were using coal, and as you know, coal is not environment friendly. And
No.
because many countries are moving away from coal, they are going into natural gas, which is environment friendly. That was one of the premise. That's why Tesla's Elon Musk, he offloaded his position, and he said, I don't want to support a variable that is not environment friendly. That was one of the reasons why he offloaded his position. So I think moving forward, Bitcoin will continue to stay volatile. uh, it's not for sophisticated and smart investors, full stop. Sophisticated and smart investors, they always, who understand history and economics, they always take position in real estate, gold, silver, arts, tangible stuff. You can go and touch the walls of your house. You can touch your asset. you can do romance with your gold and silver coins physical. That is the real thing.
I love what you say because every time you and I had this conversation and we have talked about, that, where you should be investing. And even, you've always told me this, anything you can get your hands on, is that what you believe in investing? Said yourself, is it real estate, gold and silver where you can see it? That's where you need to invest. The rest of the things can, as you just now said, I mean, from 64,000 going to 30,000, going back to 37,000, definitely, it's not something tangible which you can hold on to it. So we also going to be joined by Lily Chong all the way from Australia. Hey Lily, how are you doing? Good morning to you. Hope all is well. And Lily has a comment. She says, well said, Sean. Absolutely. So,
Thank you.
uh, Sean, what about the loonie? Now we've seen that the loonie is getting very stronger. I think when we were talking in January, the loonie was trading at around 1.45, and now from 1.25 it started going to 1.20. What's your take on loonie?
Remember, Yusuf, when we started talking in January 2020, Canadian dollar was trading at 145 against
Yeah,
USD.
yeah,
Last, just 2 months back in March, when we were talking, loonie was at 125, and now loonie is 120. And when in March I said, for this year we are expecting Juwai IQI that Canadian dollar will be trading between 1 and 1.05 or maybe 110 against
yeah,
USD. So
yeah.
it has appreciated 21%. Why it has appreciated 21%? Because of two things. One is the macroeconomic stability of the country, number one. Number two, economic confidence from global investors. Right now, if you ask me, many investors are moving to Canada. Why? Because of attractive opportunities. The economy is opening up. Their jobs are being created. So whenever you have strength in the economy, in the strength of the currency, that reflects two things. One is confidence of investors. Number one. Number two, macroeconomic stability. And when I talk about macroeconomic stability, it demonstrates how government has devised its policies to maintain stability in the economy. And when you have stability in the economy, that's where local and foreign investors they come in and they park their funds. And you were sharing that right now the average property price in Canada is over 1 million. It's
That's
not
right.
that 2 or 3 years back it was 700,000, 800,000. But
Absolutely.
now the real estate is gaining strength. And as Joy IQI, we have been sharing real estate is a new global currency. And in tough times, the only fixed asset that goes up is land. And IQI is dealing with land. So, when I see a Canadian dollar, it clearly, reflects the macro picture of the country. How Prime Minister Trudeau is leading from the front in managing, so many things. You have COVID issues, you have geopolitical issues, you have economic fragilities in the system. So it's not that easy to manage so many variables. But the way Canada is managing it, it reflects, the country is doing fairly well as compared to many other economies in the advanced economies. So I think moving forward, I expect Canadian dollar to make further grounds against USD. And year end, yes, 1-1.05, yes, very much achievable.
So you know what? I remember very specifically at 1.45, you were seeing is going to get stronger, and people are still thinking how it will go, and would love to see by the towards the end of the year. I'm sure we'll be talking about this again. That in the month of May we were talking at 1.20, and it will go to 1.05, 1.10. One thing, as you said, Sean, Canada by itself during the time of pandemic, I say that whether it is intentionally or unintentionally, it has marketed itself globally very, very well. One of the economic stability and how the crisis has been handled, and there will be a lot of inflow of people will be coming to Canada. We're looking at close to about 1.2 million people coming into Canada. And again. As you said, land is something or real estate is something where people will be coming in and they'll be getting their hands onto that. that. So I think what you're saying is that absolutely correct. With Canada being even I feel like after pandemic there will be just an influx of investors and people willing to move to Canada, whether it is related to education, whether it is related directly to immigration. And also the another great thing about Juwai IQI is that being as a global real estate brokerage, and with the data which we got through our prop tech company, we are able to pinpoint the investors who are looking to invest into a specific invest in a specific province, to a specific city, and even to a specific reason why people are looking to move into it on that. So definitely, I think what you said is that Canada has it's growing, and I think there will be a lot of investors who will be coming to Canada. And of course, we have our Juwai IQI team here. We speak your language. We speak all different languages, whether it's related to Hindi, Urdu, Punjabi, whether it's related to Farsi, Mandarin, Cantonese. We got it all. And the good dynamics about our team, Shan, as you know, is that with our team expanding right now, we are working with our IPC, which is our international property consultant team based in Shanghai and based in Hong Kong. And we are able to work with them and doing some cross selling. So again, Joy IQI, one big happy family. We're not a franchise. We talk to each other. And on top of that, we have Shan Saeed, who gives you an inside economic outlook for each of the countries, which definitely help investors to invest in those countries. So Shan, another one of my question which I always ask you is about the interest rate. What's your outlook on interest rate in 2021? Do you think there would be any increase coming up, or I've heard that Feds have said that till 2023 there's no interest hike expected. What's your take on that?
Yes, Yusuf, there are a lot of uncertainty about inflation and interest rate. There was a survey done, and I have the last week issue of Economist magazine. And on page 60, it talks about Bank of America recently conducted a survey for fund managers. And it came up that COVID is not the concern for fund managers. The basic concern for fund managers is inflation. And as you know, inflation right now carries a lot of uncertainty. And with inflation carries uncertainty, it carries uncertainty for interest rate hike as well. At a July IQI, I have shared since last year, I don't expect interest rate to go up by 2023 because this is what the Fed has been saying.
Yeah.
But there are some pundits and gurus who are saying if Fed panics, if inflation goes up, then Fed might panic and they will raise 25, 50 basis point of interest rate by mid or by Q4 next year. So there are concerns. Interest rates remain volatile. The outlook at the moment, the basic thing in the last 10 years, Fed has been trying to create inflation, and their target has been 2%. But somehow they could not achieve that target. But now inflation hovering above 2%. And how do you create inflation? It's very simple. You keep on depreciating your currency, and things will get expensive. That's how you create inflation. But I think for Fed, it has been very difficult to get this concept into their minds, and they have not been able. But finally, they have got this concept, and now with inflation showing its head, I think it will definitely create some headaches for Fed as the economy heats up. And when the economy heats up, obviously, it gives a lot of pressure to Fed how to control this economy. But again, in my opinion, there are two theories to that. I believe that inflation-driven GDP growth, your income level, is good for the economy because that keeps the momentum going. But when you have deflation, when prices are decreasing, that's a concern because when your domestic demand is slow and people are not consuming, that's a very dangerous thing because if consumption is not happening, obviously investment will go down. And when investment will go down, you will not see a lot of attraction. and that's where recession comes in. So when people talk about a recession is a business cycle, I disagree with that. Recession is not a business cycle, it's a consumer cycle. When consumers they don't spend, the businesses don't invest, the economy actually shrinks. So I think we need to have a momentum, we need to have growth in the economy, and the only way forward is to encourage people to spend money. And we have seen in the last 18 months, uh, governments globally they have come up with stimulus package. What is the basic premise to that? The basic premise is to encourage people to consume more. Once you consume more, when you get money from people, like in US they are getting a paychecks of 1400
Yeah.
$2000, that gives excitement, encouragement to people to know to spend money. But a lot of times I have seen, when you have uncertainty like we have right now in the global economy, people tend to save more. They try to lower their debts. So if I get $2000 from a US government, for example, I'll try to lower my debts. I will pay off my debts. I will not consume more. So again, it creates subpar growth because most of the people are deleveraging. They're paying off their debts. But in some of the economies where people have lower debts, they try to spend more. Like in ASEAN or in China, where people have, yes, they have debts, but they have the tendency of saving more and spending more. So economy generates momentum where you have domestic demand. And global investors they move to those countries where aggregate demand is strong, where you have young population, where people have the propensity to make the purchase. So when you have the propensity and the economic empowerment to spend money, that's where the GDP continues to grow. So I expect those economies where domestic demand and domestic consumption is strong, with stimulus packages coming in from governments, the demand will, the GDP will stay strong, and that's how investors will move into those countries where GDP is on the upsurge. So I think interest rate outlook, I would say before 23, I don't expect interest rate will go up.
As you said very rightly, the interest rate will not go up, but the interest rate is also right now directly related to the property prices as well. I mean, when I talk about Toronto and I talk about New York, I mean, the reason we've seen a lot of price increase, and you just now mentioned a very important point that as far as you have that local demand, so that's what is happening in Canada. There's so much local demand, that and the supply is less. And one of the reasons we're seeing an increase also in terms of the pricing and in some of the house prices also because it's related to the interest rate because a lot of people who were renting and they said instead of paying a mortgage for somebody else, why don't we get a house and apartment for yourself because the prices are going up, and right now we're able to lock into an interest rate of 1.45. By the way, 0.99 HSBC I heard was back again, and now it's going to we've seen under 2% for it. And it was very funny because Shan, if you today you want to go and buy or finance or lease a car, you're looking at 3.99 to 5.99%. If I want to go buy a house, it's under 2%. So it makes sense to go and buy a house. And also similarly, I've seen in the US market as well, especially New York. I mean, have you seen in New York the house prices, and it's like going like way up on the roof, and it's a very very hot market on the US side as well.
Absolutely. Absolutely, Yusuf. Look at New York. I have stayed in Brooklyn. I have stayed in Queens. I mean, you look at all these areas: Brooklyn, Queens, Buffalo, Lower Manhattan. The prices are going out of the roof. So investment has gone up by 18% in US,
Wow.
and some of these prime properties in New York are being picked up very quickly because investors are coming in and they can see a lot of value for money. And when you have a lower interest rate, that's where your assets inflation or asset prices they go up. So I think right now is an ideal opportunity. As you said, car loan 3.99 to 5.99, and house loan is under 2%. So real asset, car
Yeah,
depreciates very quickly in a year's time.
that's true.
Depreciation 20%, 30%. So it doesn't give you the value, not only in the short run but also in the long. But your house, your real estate is a global currency. You can touch, you can feel, you can do romance with your house. So that's where most more and more global investors like sovereign wealth fund, pension fund, hedge fund, endowments, they understand that, we want to go into those assets where it gives us peace of mind, where the returns are stable. We don't want double digit return. Even if we get 7 to 8%, that is good enough. Even a pension fund like CalPERS in California, they are also moving very aggressively into real estate. Look at Harvard Endowment, they're moving into arts, they're moving into real estate. They took position in Hong Kong real estate almost 2 years back, and it is managed by one of the alums from Harvard Business School. So I think more and more big players who will drive the market will be moving into this landscape, especially in real estate. That will drive the prices further up. And as you rightly said, prices are going out of the roof, and it's very difficult to catch those prices.
Yeah. Also, what I want to do is that, Shan, I want to share some of these slides, and I want you to. It's going to be like a sort of a recap of what we have talked about. But I want to do, I'll be sharing this slide with the viewers as well. But can you see my screen clearly, Shan, on this?
Chinese yuan, Chinese yuan.
Chinese yuan. So yeah,
Yeah.
that's your favorite slide, right? So we have seen you. You want to talk about each of these individual slides? I'm going to just quickly do a recap on that. So you want to
This
start with the
this
Chinese yuan? Yeah.
This slide is from Bloomberg. It talks about the upsurge in Chinese yuan. As I said, Chinese yuan will continue to upsurge moving forward, and I have confidence in two currencies. One is Chinese yuan, and the second is Swiss franc.
Amazing. Let's move to the second one. Dollars worth purchasing power of US dollar.
US dollar will stay weaker as we move
Okay.
along.
Okay. From the desk of Shan Saeed, the US dollar outlook tail end risk remains on that. This was your
Yes,
recent sharing? Yeah.
yeah, it was last week. Courtesy Raza designed all these things, so I really like the design. Courtesy Dante Raza.
Amazing, amazing, amazing. And the yield curve is sending a very negative dollar signal.
Yes, the yield curve will stay negative going forward.
Okay. And then finally the coinmarketcap.com about your
Bit,
Bitcoin.
cryptos down by 50%, now down by 40%. From
No doubt.
64,000 to 37,000, almost down by 40%.
Amazing, amazing. So, I mean, thank you so much, Shan, for sharing this information. And again, I'll be sharing these slides also in our chat. Anybody who has any questions looking into it. So, Shan, anything else you want to say before we say bye to our audience? Anything you want to add on to it? What are we expecting in the next few months about anything?
Yusuf, the uncertainty has slowed down for the time being, but those sophisticated and smart investors who still want peace of mind, I will request them stick to the basic. Stick to real estate, stick to asset class where you have made money. Don't jump into anything where you don't have the expertise. In these tempestuous times, the clever move is the street smart move is that you go into that asset class where you have got the expertise. Do your homework, do your due diligence, ask around, ask your friends, family, where do you go? Don't jump into any asset class because things will stay volatile for the next 2 to 3 years. So the best shot is stick to the asset class where you have made money in the last 10 to 15 years and always seek guidance from your elders. Thank you.
Absolutely, Shan. Very well said. And again, when we talk about the asset class, we're talking about, as Shan said, something tangible you can hold on to it. The land, the gold, and the silver. And then when you talk about land and real estate, that is where you can't go wrong. And we have seen over the years that how the prices, even if I'm talking about Toronto, has been appreciating on that. So with this note, if you guys are looking to buy, sell, invest, or even for any questions, feel free to contact our team, Juwai Team IQI Canada. The best part about our team is that we are here to give you an advice. There is no charges for that. We are not there to sell. I always say that all of our team members have got this mindset that we are here to help you and give you the right advice on that. With this note, everybody, please stay safe. Shan, you also stay safe, and we'll look forward for your next session next month. Till then, take care, everybody. Bye bye.
Bye.